On record. Hope everyone is doing well. We're starting another portion of this remastered beginners bootcamp, and by far, I guess this will be my proudest work because this will be the gate of many new beginners unborn that will come across Forex and receive information undiluted and will put them in the right direction. And we had a meeting today, and there was the bid, or there was an argument that because there is so much more added value into it, that we should increase the price. So I'm going to ask you two questions. Do you think there is more value in this bootcamp than the other one? Even though the other one is good, do you think this bootcamp has added value? Yes or no? Just want to see if the chat is working before we get into today's lesson. I mean, I think we all know that this bootcamp has added layers, added value, and by all means, it should justify a price increase. But do you think I'm going to do that? I'm not. I'm not going to increase the price of the beginners bootcamp, which means that the same value that you got from the first one times 5, I believe, for the same price is going to be maintained. Now, I want to be able to tell you why I do these boot camps and these courses and why I sell them for the price I am selling at. I could add an extra 0 to every single product that I have released, and nobody will be able to argue because the results have been able to speak. But the reason why I haven't done that, and I'm not going to do that, is because I want to be the standard when it comes to Forex education, particularly in Africa. I have an interest in Africa, okay? And I want to become pretty much the Forex Amazon, so to speak. So everything you need pertaining Forex that's in line with our vision and in line with our beliefs, it will be available. And that is why I am doing this. I didn't come for the glitz and glam. That is why I turned down many deals to do this movement and continue going in the way that I feel convicted. And so I want people to be able to come into the beginners boot camp without having to spend thousands of dollars getting Forex education. And at the end of the boot camp, they should be able to decide for themselves whether Forex is really for them or it is not for them. This beginners boot camp, can anyone do a count? Have we passed 5 hours yet when it comes to this boot camp? If I try and go back, I think we've done about 4.5, maybe 5.5 hours of this beginners boot camp. Does anyone know? Or can anyone give an educated guess? You're welcome, Bright. Don't worry, this is recorded and it will be in your back office on our website. So don't worry if you've missed anything beforehand. One of our admins will be able to direct you. We've been able to pass about 5 hours or so of this beginners boot camp, and the previous boot camp was about 9 hours. Let me tell you, we're just getting to halfway in this remastered boot camp. So we have a lot of things that we need to cover. And I want to start off this lesson by covering candlesticks. We're going to talk about currency pairs, which we didn't get to finish off on Monday. And then we're going to try and do the introduction of market structure, understanding how the market speaks. Now, in this market structure that we're going to cover, there's going to be many elements. We're going to go through ranges and trends, and those are going to be one topic each, and they should last for about an hour to an hour and a half each. Then what we're going to do is that I'm going to give you the skeletal framework of the rhombus theory, and then I'm going to give you the skeletal framework of the rectangle theory. And what you need to decide as beginners or those who are starting their journey all over again, born again Smurfians, is that you need to decide whether you are a rhombus trader or a rectangle trader, because you cannot or should not be both. The human mind is not conditioned to be able to do many things at once when it comes to investing. So you need to be able to pick one school of thought, and that is going to be the way that you grow through when you go to the next part, which is taking a course, whether it be rhombus or rectangle, then moving up in your education, either in the mastery. When you graduate from the mastery, then you go on to try volatility if you want. The VIX class has been doing phenomenal, and we put that in as a prerequisite, or not a prerequisite, like a prequel for the big course. So the VIX masterclass, if I go through the blueprint, you start at the beginners, you pick a path, rhombus or rectangle in the SV courses. When you grasp what's happening there, come back to the bootcamp section of mastery. After mastery, then I would say go into the VIX masterclass. You can make a lot of money there. I mean, who was there when a certain individual cleared 13,000 US dollars last week? A lot of money can be made there. Then you jump into university, and then after that, you pass your exam for university, you go into our honors bootcamp. And there are still more things that I'm looking to add to our learning. But let's go through candlesticks. After we get through everything, you need to decide which one you're going to be. And the journey of understanding how the markets speak starts now with candlesticks. Now we have different type of charts that we have in the market, and we're not going to go through what those different charts are in depth, but I'm going to mention them, and maybe in your own time you can have a look at what those charts mean. We have the line chart, which just shows lines of highs and lows. Okay, we have bar charts, which is like the prequel of candlesticks. We have the Japanese candlesticks invented by the rice traders in the early 18th century, I believe. Then we go on to other forms of Asian chart reading, whether it be Renko or Heiken Archie. And we're not going to go into those ones because they're in other forms of this academy. But the beginning of understanding how the markets work come down to these four groups of candles. I want everyone to confirm whether they can see my screen by typing a Y or a yes in their chat box before I continue. And we're going to go through all the meanings of these candles, but we're only going to focus on one. And that one is going to be our case study that will allow us to understand how to read the market. This will work on crypto. This will work on stocks. This will work on commodities. This will work on indexes. This will work on indices. What we teach here is not to read Forex markets. What we teach is how to analyze the markets itself, how to read charts. And your journey on reading charts start here. What we learned beforehand had to do with psyching your mind psychologically. I shared my story about how I got into Forex. I've gone through a lot of ups and downs in the 3.5 years I've been doing this, but I don't think many people can say that they've done this less than 5 years and have traveled the world where countries are begging for their presence. And I'm honored to be able to have that title. Now I say that I can't be at every place at once, so that's why I have this academy. So we've gone through how the markets work. We've gone through your psychological thought pattern. Now we're getting to understand the market's psychological thought pattern, and we're going to wire them together. So the first candle on the left, all right, is generally called an engulfing candle, but it has to meet a condition before it's called that. The original term is called Marabuzu, but for the purpose of this presentation, we're going to stick to engulfing candles, and we're going to come back to learn this thing in depth later. Engulfing candles. Now, there are some things that you need to know about engulfing candles that you will pay attention to later. It is the most destructive candle of any candle that you will see in the Forex market. You are going to either win big when it comes to engulfings, or your account will be blown from an engulfing. Engulfing is both deceptive yet prophetic at the same time. I call it deliciously, bitterly sweet. If you're able to be on the right side of the engulfing candle, then you're going to be on the right side of making money. However, if you're on the wrong side of the engulfing candle, you're going to lose, and you're going to lose bitterly. So we want to go through this one a bit later, and we're going to skip going to the next candle, which is called the spinning top. There is a reason why I'm skipping the engulfing candle now and allowing you to be exposed to the other candles first. what does the spinning top actually mean when it comes to geometry? Not according to other platforms, but what it means to us as geometric traders. Spinning tops represent when one team is winning in, like, has the momentum. So maybe the bull has the momentum, but it's only winning by a little bit. Okay, so we've established that the difference between the open and the closed price is called the body. And so maybe for a time the bulls are winning, for a time the bears are winning, but when it comes to the close of that candle, it's only a small body that's being represented, and it has big wicks on either side. It doesn't always have to be big wicks, but what you see is that there are wicks on either side of the body. And it just means that one team may be winning, but they could be losing grip of their lead when it comes to their wins. That is the spinning top. The next group of candles that you're looking at are the hammer group. And the one on the left is called a hammer, and the one on the right is called an inverted hammer. I'm going through this really quickly because we don't need to go too much in depth onto these. So one is called the hammer, which means that it's upright, and the one that's upside down is called the inverted hammer. And what this generally means is that one team was winning, but then the other team took over, and now they have begun pretty much the takeover. So let me do an example here with this hammer. Generally, what is happening is that the bears were winning for a time, and then it got to a point where the bulls took over and then established their dominance. So the candle might have opened at this point over here. The bears might have dragged price down to a low point, but then the bulls, through whatever reason, decided to push and gain strength and now close higher than where it opened. And these hammers normally represent small bodies, big wick, but the wick is generally on one side, or if it is on two sides, the wick on the other end is not so prominent, called a hammer. And the other one is inverted, which is the other way around, where the bulls might be winning in the beginning, but then at the end of that period, whether it be 1 hour, 4 hours, daily, monthly, or even yearly, the bears have now taken over to establish their dominance. These candles go by other names. And you see, what you're going to learn as beginners and what you're going to learn in this academy is that we are not too technical when it comes to naming things. You don't win points by being right on general knowledge of Forex. Many people will come into the academy and say, well, I've learned technical analysis before, and I've learned all this stuff before. But there is a mismatch between what you know and what the application of that knowledge is, which is wisdom. So what we're doing is we're taking away all the fluff, and we're saying that what you know might not be as important as what its function is. Now, everything is as important as its name. And so what it is named should operate in its function. But if you just know for knowing's sake, you will not get very far when it comes to trading. So if you want to know their technical names, you can. The hammer is often known as a morning star, and the inverted hammer is also known as an evening star. They're stars. Or you can know they are known as pin bars, okay? Pin bars. Whatever you want to name them, it doesn't really matter here, okay? I've seen traders argue over technicalities, whether it's a hammer or a morning star. It does not matter here. What matters is what you see and what it represents, and that is one team was winning, but then the other team took over to establish dominance. Type in a 111 if you're with me so far. We shouldn't be too quick on all these ones. You're going to find that most traders argue on these three sets of candles: the spinning top, the hammer, and finally the doji. And let me tell you what the doji is not. The doji is not a reversal candle. You will see that written in a lot of books. When you see this candle, it means it's a reversal. No, that is not what it means. A doji simply means that it's indecisive about where it's going for that time. It doesn't matter if it looks like a dragonfly or a tombstone or a crucifix or an inverted crucifix. It doesn't matter about where the wicks are. What matters is its function, and that is it's indecisive about where it's going for that time. You will see dojis in the middle of structure. You will see dojis at the end of structure. And we don't want to place too much premium on these three candles. In the beginning, I don't place any emphasis on these candles whatsoever because these candles don't make you money. Let me tell you, the one that is the money maker, the one that gives you signs as to where the market is going, and the one that will understand how to not get burnt by the market is the engulfing candle. These other candles are simply communicating a language that you cannot understand unless you decode what that language is saying. Drop a Y or a yes if you're with me so far. So, the spinning top, the hammer, and the doji, they are all not reversal candles. They may lead into a reversal, but there are signs that take place before that. What you need to pay attention to is that we have an in-depth study on hammers and dojis in the mastery section of our academy, where we reveal that not everything the charts say is the truth. They are hiding behind codes and different sequences to be able to communicate when they are going to go. That is not covered here. That is covered in the next level up. What we want to focus on is we want to make money. As a beginner, the number one question we get is, after I learn this thing, will I be able to make money? And we're going to cut straight to the point and say, yes, at the beginner's level, we're not going to tell you that this is all there is, folks. There ain't no more. And then introduce a new course where you didn't learn anything in the previous one, and then you have to force and jump into the next one. Every level demands that you are able to make money at your skill level to work your way up. If there are any people in this class, how many can attest to the point or to the fact that you were a beginner, you made money at your level, and you were able to move up in the academy? If there's anyone that can testify to that, please let the congregation know so they know that they don't need to worry. There are beginners here that have not moved up that are making 1,000 pips here, 2,000 pips, 5,000 pips. So we are going to get to the point of why this candle, the engulfing candle, is so important. Now, for an engulfing candle to be an engulfing candle, it needs to meet conditions. Let's write these things down. For an engulfing candle to be an engulfing candle, it needs, underline needs, to meet certain conditions / requirements. If it doesn't do this, it's not classified as an engulfing candle. And we're going to go through what those conditions are. But I hope everyone's writing this one down. For an engulfing candle to be an engulfing candle, underline that, it needs to meet, it has to, needs to. It's not dependent on your feelings or what you think the market is saying. It needs to meet these conditions before you can say this is an engulfing candle. Now, what the engulfing candle is to us in this academy is that an engulfing candle is a reference point in the market. What does that mean? It means that the market comes from or goes to an engulfing candle. Those who are part of the old-time beginners bootcamp, we didn't cover engulfing candles in so much depth, right? We're going to go through a term called resets in just a minute. So an engulfing candle is a reference point in the market, which means that whatever decision you are making, it should be from an engulfing candle. Whatever decision you want to make, whether it be entry, it should be around an engulfing candle. Whether you want to take profit or exit the market, guess what? It should be at an engulfing candle. The market goes to and comes from an engulfing candle. If you're with me, drop a 111 so I can proceed. Don't worry, Bright. You're going to be taken care of. I know it's your first class. After you get on, you'll be able to go to the back office and see all the other things that you have missed and catch up. So don't feel scared. You're going to be taken care of. You have classmates here that will take care of you. All right, so what would make this an engulfing candle? How am I able to make a reference in the market So I know exactly what to do. Last lesson we covered take profit. We covered buy stops. We covered buy limits. We covered stop loss. We covered entry. And we're saying that your entry should be at an engulfing candle. Your exit or TP should be at an engulfing candle. You're beginners, you want to learn how to make money, right? This is where it is. This is where the secret is. This is a secret that should be in university, but we're doing it now because we want you to make money. Whenever you enter, it should be in reference to this engulfing candle. When you exit, it should be in reference to the engulfing candle. One thing, if you pay attention in Brain Hub, whenever David drops a chart, he will always highlight the engulfing candle as a take profit. Okay, he will always make that highlight. So take note of that. Now, we need, what are the conditions that need to be met in order for an engulfing candle to be an engulfing candle? Let me tell you what an engulfing candle is not. Let me put it in red. An engulfing candle, hold on. An engulfing candle, candle is not, in brackets, I repeat, comma, not a big candle. You see, the function of a thing is in its name. That's one of the biggest lessons you will learn from the story of Adam. You see, what people get wrong all the time when it comes to the Bible is that they said that Adam was the first zoologist because he named all the animals. But that's not what the Bible said. God says, I want to test to see if you are made in my image and likeness. So what I want you to do is go through the land that I've created for man to dwell. And I want you to name the animal. And the Bible says that whatever Adam named that animal, it was its name, which means that he was accurately able to decipher its function and then derive its name. Okay, now because we have foresight, we are able to find a thing, identify its name, and then know its function. That's why Jabez was rich, but he had a life full of pain because his name meant pain. His sorrow came from an identification or a definition of his character. So an engulfing candle does not mean it's big. You're going to find small engulfing candles. You're going to find big engulfing candles. You're going to find middle-sized engulfing candles. The condition of an engulfing candle are a few things. I hope you're ready to jot this down. The first thing of an engulfing candle that you need to note is that, one, an engulfing candle needs to, I don't think I need to put I repeat, needs to swallow the size of the previous candle. Okay. Engulfing means to swallow. To engulf means to swallow, to overtake, to overshadow. So in order for something to be engulfed, it means that something had to have been swallowed in order for the engulfing to take place. So an engulfing candle needs to swallow the size of its previous candle. So what I'm going to do is I'm going to shift my screen across small. I'm going to turn this candle into a green one. And then what we're going to do is, actually, no, let me not get ahead of myself. So this is what it looks like. So you have a candle before the previous candle, all right? And you have a candle after, and you see that the second candle is larger than the first candle. Sorry, I lost my train of thought for a second. So this is what we're doing. So an engulfing candle does not mean it's big. It means that it has swallowed the size of the previous candle, okay? Now, I'll get into the technicalities a bit later, but what you need to know is that the second point you need to identify is that the candle engulfed needs to be from the opposite team. What does that mean? It means that if there is an engulfing candle to take place, it needs to swallow the size of the previous candle. That is number one. But number two, the two candles should not be from the same team, which would mean that this one I want to turn green and the other one I am turning red. I hope everybody is with me on this. So now we're giving our engulfing candle a little bit more flavor to our definition. It's not just a big candle. It is swallowing the size of the previous candle. Okay. I should even add all candles because an engulfing candle can swallow more than one. But the main thing is that it needs to swallow the previous candle, and the previous candle must be from the opposite team. So this example I have over here is showing that a bearish candle was swallowed by a bullish candle. Now, let's add more to this. You need to pay attention to the direction that the engulfing candle is facing. Okay, pay attention to its direction. So what that means is that if a bull candle is swallowing a bear candle, then you are focusing on going one way in the market. We haven't covered that. That would be in currency pairs. Okay, but we know that bulls are looking to go up in value and bears are looking to go down in value. So if you are looking at a bull candle swallowing a bear candle, you are paying attention to the fact that we are looking at the market going in an upwards direction. Type in a Y or a yes if you understand this concept. So you need to pay attention to where it is going. If it is a bullish engulfing, it means that we're looking to go up in the market. That is the prophecy now that is taking place. The other thing that needs to be to pay attention to is the other factors of a candle. Now, if you're looking to go up, what you are focusing on is everything being swallowed from the body up. Are we together? We're looking at everything from the body up. Now, when we get into market structure, I'm going to teach you what happens when you see part of a candle that is facing the other direction. So what I mean by this is, if there is a wick out of this bearish candle and this bullish candle is able to swallow both the candle and the wick, it is an engulfing. Even if it gets to the point where it's nearly at the top, as so far as the body of the green candle is able to swallow the entire body of the red candle, it is an engulfing candle. If the wick is higher than the current candle's body, it is not an engulfing because it has not swallowed it entirely. 111 if you're with me. I don't want to lose anyone when we're going through these technicalities because this part is a new part into this remastered bootcamp. So again, I'm going to cover that. What you're doing is you're making sure that the engulfing is showing you the direction of where the market can potentially go. And in this example, I've made this candle green. So it means that we're looking to go up in value. And it means that it had to swallow an opposite candle from the opposite team. And it has to swallow both the body and its wick that is pointing in the upwards direction. And if the wick of the previous candle is taller or overshadows the supposed engulfing candle in question, then it is not an engulfing candle. What it needs to do, it needs to swallow everything, and that should be able to be contained inside that candle. So if I move everything from here to here, you see that that candle has been swallowed. That is what I mean by being able to swallow everything going in that direction. Now, you're going to be curious and say, what about the wicks at the bottom? Like I said, we're going to cover it in another topic, but this means something. And this still counts as an engulfing candle, okay? Because you're focusing on where the body is onwards, and you're looking at the direction of where the market is going, and it's going up. Okay, so let's look at adding more to this. How many candles have been engulfed? How many candles have been engulfed? Great. Let's try another one. Now, how many candles have been engulfed? Still two. Very good. All right, I'm just seeing if everyone's paying attention. Very good. How many candles have been engulfed now? Everyone's saying one. Very good. Okay. Now, how many candles have been engulfed? Hesitation, hesitation. None. Exactly. Because if there is a candle between and the wick is now higher than what is the engulfing in question, then no candles have been engulfed. Very good. Very, very good. So what you're looking at is the previous candle. Has it been swallowed? If it has, then look at the previous candles from the opposite team. Has it been swallowed? Right? Very good. The previous, very good, Kenneth. The previous is always going to be the reference before you continue going along. Is everybody okay with that? Drop a Y or a yes. Because understanding this is going to be very, very, very important when it comes to making money. I want every beginner to make money. I'll do examples for bearish ones because you're going to notice that some are more bullish inclined and some are bearish inclined. But I want us to get the points out of the way, okay? Remember, we're going to cover what this means very soon because our minds are still looking at, though you understand this, what about the stuff at the bottom? So don't worry, we'll cover that. Again, let's go through those 4 points. An engulfing candle is not, I repeat, not a big candle. If we go through some charts quickly, I'll be able to show you some engulfing candles that might not meet the big candle theory. An engulfing candle needs to swallow the size of the previous candle or candles. We've established that. The candle engulfed needs to be from the opposite team, which we've established in that example. And finally, pay attention to the direction that the engulfing candle is facing, because that is going to be able to tell you what the future holds. Now let's go over here and I'm going to draw some examples of how this crazy thing is going to make us money. All right, so it's going to take me a bit of time to draw, but if you can bear with me for like 2 minutes, I'll try and draw as fast as I can. I'm going to draw smaller examples. Okay, so what is this? We are seeing that 2 bearish candles have been engulfed by a bullish candle. We're now trying to put things together. And so the bull team is looking to go up in value. That means you're looking to buy in the market. So in buying in the market, it means that you're stating your claim as a bull supporter. All right. Now, we are expecting the market to go up in value. That is great. You're looking to buy in the market. That is great. And so what you now see is that the market is going up. And guess what? You're happy because the market is going up. Remember, the market is going in your favor. According to your prediction, your money will turn blue, which means that you are in profit. So you're seeing something like this taking place. And if you're not careful, greed is going to start taking over. Why is greed going to start taking over? Because the demon that is surrounding you is going to be whispering into your head that, oh, it's green. Oh, it's bullish. Add more positions. add more positions. So now what happens is that you're going to add another trade here because it's green. The market is going in your favor. Then you start adding more here, and then it's green again. You keep on adding, keep on adding, keep on adding, keep on adding. This is the biggest rookie mistake that even veterans are still making. You start entering a lot because you think that the market is going to forever go in that direction. And they, as an entity that I won't name, they know that you know this, and they mess with your psychology a lot. So as the market is pushing up and up and up, what it's doing is it's releasing happy hormones in your system to start making careless mistakes. And then all of a sudden, the market starts going down. Make this red. Market is pushing down. And you're thinking because overall you are blue, overall you're in profit, you don't care if these ones are in red. And then all of a sudden, the market goes down more, and it goes down more, and it goes down more, all the way back down. And you're thinking, what's going on? Are the witches in my family against me? Did I steal from someone? This is where you start saying now Forex is rigged. Every time I'm watching the market, I'm in blue. But then when I go to sleep, these things happen. So you want to be awake all the time. But there's a trick that they play to make people make the same mistake the first time. I'm going to go through this as detailed as possible, and I want you to take notes. Now, generally speaking, I'm going to use generally and typically, which means that it's not absolute, but it's going to give you an advantage above other traders. Now, when an engulfing candle has been set, what it's trying to do first is project. That's what I'm trying to project an interval. I'm going to use the word interval, all right, or project a distance. All right. I'm making references, and then I'll explain what everything means. Now, after projecting an interval or a distance, what it's then going to come back to do is it's going to punish all people who don't know any better. So what's happening here is that all the traders that invested at these levels downwards, okay, they are going to suffer for entering into the market late, according to what has been projected on the chart. So in this phase, what is happening is that you're happy, things are working well, you start planning your rent, you tell your boss that you quit, you make all these promises, and then all of a sudden the market starts coming back down. And it comes back down to a particular point before it moves in the proper direction it wants to go. Now remember, the engulfing here is symbolizing which direction. It's symbolizing that it's going up. But what we're going to add to that definition is that it's looking to go up, but it's not looking to go up right away. And so what you need to do is you need to pay attention to how far up this distance, this engulfing candle is creating, okay? And we call this one the first move. And this first move is not for trading. This first move is for analysis. So what you're doing is you're making a measurement to say how far up is this move looking to go? Because trust me, Forex is very cyclical. It will go back to where it started in no time. And remember how I said that the engulfing candle is either a reference point going to or coming from. So the market has now gone away from this engulfing candle and it's looking to come back to the engulfing candle. But there's something in its coming back that you need to pay attention to. This first move that has been made is a place or a marker that you need to make a reference point in the future with your trade. Now, as a trader, if you're looking to support the bulls, it means that you are looking to buy in the market. Now, if you're looking to buy in the market, you need to be able to know where you are buying to. So when that projection of the interval has taken place, what it's telling you is that the next time through, if it decides to go up, the minimum distance it's looking to go is going to where it set that first interval. If you're with me, drop a Y or a yes. Those who are new, I apologize. It's getting a bit wordy, okay? But I'm trying to make this as simple as possible, even by using arrows. So the engulfing candle makes a projection into a certain direction, and it's going to go to a certain point in the market where then the market goes back against itself, and it will look to go back to the place where this first move started, okay? When the market looks to go back up, what it's looking to go back and do is to head to the place that the interval was made. So let me just copy these. So it will look to go back up, up, and up, and its first target will be the place where that interval was made. Sorry, it's getting a bit messy. This is what the market looks to do a lot of the time. So when we say that the market is unpredictable, I laugh. Okay, so this is what has happened. So the market has gone up, it has projected the distance, it has gone back down, and now it's looking to go back up, at least at the very minimum, to that particular distance. Now, when you're looking to buy and you see that it's gone to that distance, you at least know how far it's willing to go. But there is something that happens in between that will let you know when it's time to buy. All of this that's taking place here, I have it underlined or marked in red, is an area that you don't want to enter the market in. This is a place where it looks to trap newbies. It's looking to invoke greed. It's making you want to buy before your time. It's this one, which we call the second move. That is the move that you want to be able to enter. I'm going to make it blue. Okay, so the first move is analysis. How far up is this going? Where was the engulfing candle coming from? And the second move over here is, okay, now we can buy in that direction because the engulfing candle told us so. And now we have a take profit in sight based on the first projection that was made. So we make the rule, okay, or we make the recommendation that you don't make entries or decisions based on the first move. You make calculations on the second move. The second move is the fruit of the homework of the first move. Let me write that down and someone can quote me later. The second move is the fruit of the analysis of the first move. I hope everyone wrote that down, because second move trading is quite a nice name actually, but the second move is what is going to be easier. It's what's going to give you assurance, and it's what's going to give you peace of mind. Now, there is a reason why I put this engulfing candle at this point, because we want to go back to our ruling that it's a reference point, and it came back to an engulfing candle. But you're going to assume that it has to come back exactly where the engulfing candle first opened. No, when we go back to where an engulfing candle starts, this is what happens. The engulfing candle is formed. It projects an interval or a distance. It then comes back down to where the first engulfing candle made that move. And where it stops is very, very tricky. Remember what I said. You need to look at the engulfing candle. It doesn't necessarily have to be big, but it needs to be bigger than the previous candle or candles from the opposite team. So what you're going to look at is you're going to look at the highest engulfed candle, and you're going to make that a reference point in the future. And what you're going to do is you're going to place a horizontal line or array at that point. And you're going to say that from this point onwards, that is where the engulfing candle started. And that is the reference point I am talking about. When the market comes back down to where the engulfing candle started, it's coming to the point of where it overshadowed the highest point if you're buying or the lowest point if you're selling. And we'll look at bearish examples in a minute. So market pushed up, engulfing candles over here, formed a projection. That is where you're looking to aim to in the future. And it's going to come back down to where it first started in the first place. And this term, ladies and gentlemen, is a term that we coined last year, and we call it a reset of the market. It's starting all over again. So it pushed, okay, from that distance, it came back down. The market has now done a reset. And in the reset, it's looking to program itself to go in the same direction and the same distance than where it went the first time. This is what we are using to start our chart analysis. This one alone makes a lot of money. If you ask David, he just looks at the market and he says, where are engulfing candles? Where are they? Because that is where I'm looking to have my take profits for the future. And we'll go through that more in trends, because you can have multiple take profits with multiple engulfing candles. Now, here's the thing. When a reset of the market has taken place, when a reset of the market has taken place, that engulfing candle no longer becomes a point of reference. I'm going to explain that. I'm going to explain it. Don't worry. I'm going to explain. I'm just trying to make this all nice. Please don't take the shortcut by screenshotting or taking pictures. Please draw this. Draw as I am drawing. Trust me. Now, what this means is that once a reset has taken place, you are no longer looking at the market to come back to this point as a point of reference. It's no longer that point of reference again. Once a reset takes place, it might happen, it might bounce off 1 or 2 times, but so far as it's met that projection of the interval, it's no longer regarded as a place where you're looking for the market to reset again. Drop a Y or a yes if you're cool. It's good. I'm tagging on. I'm glad. Good. So when the second move starts, the first move is no longer there. However, I've been able to draw this on purpose to show that I've made another engulfing at this point. So if another engulfing takes place at the second move and the move has now gone, guess what? That second move now becomes the new first move, because an engulfing without a reset is an engulfing as a reference. I'm going to write that down. I'm dropping nuggets today. I don't know what happened. I think it was the rice that I ate today with the sardine and boiled egg, because I'm speaking mysteries here. So an engulfing candle that has reset is no longer a reference point. That means any engulfing candle that has yet to reset is a reference point. So what you want to do when you're doing your analysis in the market is you want to be able to scan and say, okay, in the big picture of things, where are the engulfing candles in the market that have yet to perform a reset? Because those are the places that the market surely sooner or later will then go for. Okay? Drop a 111 if you've written these notes down. Some of you are fasting. Don't fast. I've eaten plenty today. Rice, stew, sardine, egg. That's a heavenly food. It puts me in the third heavens. If you want me to teach well, tell the girls at the hub and in the man cave to feed me rice and egg sauce or rice and sardine. Finish. Anyway, so let's go on. So an engulfing candle that has not done a reset is a reference point for the future. This is going to be very, very handy later on. Now, what happens? What happens? What happens? What happens if, let me put this down here. Now, what happens if on the second move, let's say that this is not an engulfing, but it does something like this, and then copy this down. Oops, wrong button. Clone. Oh no, I'm pressing shift, aren't I? Control drag. There we go. All right. So what happens if the interval of the first move, okay, what happens if the interval of the first move is now broken? It means that it's gone beyond where it's supposed to go. So you see that I purposely drew a candle that went above that projection, okay? What happens is that this interval that you have drawn becomes now a new reference point for potential take profits to take place. What this means, and we'll cover the term breaks and retest later, is that when it goes beyond this distance, you need to create a new interval that's the same distance right above. And this means that when the market is looking to go up and it needs a new place to rest, it's going to be resting at this new interval that has been drawn. Let's just make it one big candle like that. So this is a saying that I have. It's a small little rhyme that I have. When it goes beyond, okay? So when price goes beyond your interval, what do you do? The response is go times 2. So when it goes beyond the interval, what do you do? Your response is simply 1. Go times 2. All right. So when it goes beyond this point, you just copy that same distance and put it above. And guess what? Someone help me here. What happens if market continues going up like this? What would you do? Okay, new interval. What do you do? Copy that interval, go up. So now you're going to be working in intervals. Every time it breaks, and that's another thing that we'll learn later on, it will go to the next interval, and then the next interval, and then the next interval, and then the next interval. And there are conditions to be able to know whether it's going to reverse against you or keep on going. But for now, this is something that you want to take notice of. I hope everybody has written notes for this. There's so much content to go through. Normally what I do is I give maybe 10 or 15 minutes for everyone to look on their charts and find these engulfing candles. But because there's still so much to go through, we can't afford that time. So let me quickly go onto the chart and see if I can find any examples in the market. Okay. Here's a small example, but it's an example nonetheless. So what we have here is that we see there's an engulfing candle over here. Can we all see that? So this small-ish candle, which wouldn't be regarded as an engulfing anywhere else, is an engulfing to us. Look over here. And what happens is that from the place you mark your engulfing, so I'm going to use this rectangle so it's thick so you can see what has happened. What you're going to do is you're going to measure from the point that it made its interval. So you can see over here, made its interval over here before coming back. So now that becomes the distance in which becomes your standard, okay? So I'm going to make a marking at this point like so. If everybody is with me so far, type in a 111 so I know, and then we continue. Just 5 people to give me a 111. I'm trying to be as thorough and as in-depth as possible, but you know, my accent sometimes holds people back. I'm losing it slowly though, if you've noticed. Okay, so this is the interval that was created. And when it came back up to perform what we call as a reset, we now know the distance of where we are looking to go. And you can see here that when it came down the second time, when it came down the second time, you notice that The wick went below, but it closed above, okay? So we can't use the what do you do go times 2 yet. But what you can do is that anytime it performs a reset, you can then go in the market again. Like I said, when one engulfing has been done, okay, and a reset has now taken place, it's no longer valid. But because of, I want to do this practically, and I want you guys to see everything, I'm just going to refer to the one engulfing candle over here. So it's formed. The recording should be uploaded by, someone give offering to Luca, please, by tomorrow, God willing. You know he doesn't work on weekends, so if you disturb him, it's your own matter. Anyway, so we'll see how we go. It should be uploaded fairly soon. So we've made that interval. It's now come back up, and just in case it goes down, and you're able to pick when it goes down, we create this interval over here. Move it down. So if it breaks that interval, what do? You go times 2. And you can see how after it broke this area over here, it closed beneath that interval. It then went down to meet the next projection. So having the engulfing candle with you is such a nifty tool. It's a super, super, super nifty tool, because if you're able to gauge where the interval is, you're then able to know how far it could potentially go in the future. Now, look at this. Let's say you just seen the chart for the first time, okay? And you want to be able to gauge where the market is going. So let's not cheat here. Replay mode, bang. It's all gone. So what we have down here, all right, and there are conditions to engulfing candles, but we'll go through those a bit later. So what we have over here is an engulfing candle at the bottom like so. Excuse me. And then you've made the projection of where the engulfing took place to the highest point, which is your interval, okay? And what you want to do is create that distance, so you know that if the market is to come down, I am then going to activate my buy, okay, and then buy in that direction. So let's take this through. Let's assume that the market is going to come down. In the chat box, what are you looking to do now? Where have I placed my arrow? What are you looking to do? As a trader, it's looking like it's bullish. There is a bullish engulfing that has taken place. The prophecy saying it's going to go up, but we're not looking to go up fully right now. So as a trader, when you're supporting the bulls, you are buying. If you're supporting the bears, you are selling. You're going in the direction of what the team is doing. So now we have set that interval. The market has come down. Now, if it has gone to that interval, guess what? You have bought, you have taken your profit. And the distance between those 2 points is about 50 pips. Not too bad. But what happens if it goes beyond this mark over here? What happens if it goes beyond the interval? What do you do? Put in the chat box. If it goes beyond that interval, what do you do? Go times 2. So what we've done, very good. So what we've done is we're going to copy this distance that was created and then select 2 items. So what I did was I held on control. I clicked the 2 items that I wanted to be cloned. I'm going to press on control again, click and drag, and it's now created another replica of my interval. So that's what I'm going to do here. I'm going to keep on copying it up. All right, because if it breaks that interval, I want to be able to know that I can take advantage of the market and then keep on buying until the conditions of the market change. All right, so this is what I've done. I'm going to make it easier for myself. Select multiple. 1, 2, 3, 4, 5, 6, and drag. And now I've been able to create intervals every step of the way. And the information I got was from this engulfing candle, was able to tell me how far it's looking to go to in each interval. This means if that you have a reset that is 1,000 pips away, you now know that this trade you're going to be in, you're looking at 1,000 pips. And it takes a bit of grace and patience to be able to do that. Okay, so let's see how the market plays out. We've been able to mark intervals, at least, 6 levels, and they're intervals of about 50 pips. So where's my projection tool? Price. So from this point here, first interval, 55 pips. Okay, at 0.01, how much is that going to be? Someone be quick with that one. At 0.10, how much is that going to be? At 1.00 standard lot, how much is that going to be? So what you're doing is you're making that plan. You're planning ahead and allowing yourself to know that at every level, I'm getting 55 pips, 55 pips, 55 pips. Okay. And then, later on we can go through this. You can look at other engulfings that may have taken place at the top that have not been resetted, but we'll cover that in trends later on. Okay. So I'm going to activate the replay feature. Let's see what the market did. Let's see if we can follow what's going on. I'll take the speed down and I'll commentate as we go through. That's a bit too slow, isn't it? All right, so you can see that there's a reset that took place. Does it go to the first interval at least? Yes, it does. You see, it doesn't close above that first interval. That is why it came back down. So let's see what happens the second time through. Does it break above? If it breaks above, we need to pay attention to that. See how it broke above, and now it's gone straight to the second interval. If it breaks above, we're looking to go to the third interval. If it breaks above, what are we looking to do? Go to the fourth interval. And you'll see that the market plays between the intervals. So anytime you're looking to go between one interval to another interval, if it breaks beyond, what do? Go times 2. You can see here, the market is in between these two intervals. You have a nice clean break, and now it's gone to another interval. Sexy, isn't it? It breaks above. Let's see if it stays above. If it's able to stay above, we should be expecting it to hit the next interval. The information that the engulfing candle is able to show you is not taught in any textbook. If there's any textbook out there that teaches this, let me know. But this is through pure revelation of what the engulfing candle does and the information it's able to present. Look how the intervals are able to show reactions in the market bouncing in between. Okay, that is the power of that. So if you were able to go at least those 4 intervals, 1, 2, 3, 4, 226 pips. If it goes beyond, then hallelujah. Thank God for that. But at least you know how to play between intervals, and you'll now know how to incorporate your stop loss, what the role of your stop loss is, what the role of your take profit is. If it goes beyond, there are conditions to going beyond, but what do? Go again. You see how it's still going. It's not magic. It's not voodoo. It's able to understand what the market is doing. How do you see on the chart how to calculate pips? The price is up here, and you don't need to calculate it yourself. Over here, down here, we've gone through it. How to use TradingView. All your projection tools are here. Look at price range, where you want to measure from to where you want to measure to. This number is showing the amount of pips between this point and this point, okay? This is a pretty cool trick, don't you agree? Everyone still with me? As a beginner, if you take nothing else out of this, the engulfing candle alone makes money. Do you know how we use engulfing candles in volatility? How it makes money for us? What it does in the stock market, the indices market, how it makes money, how we're able to use it as a reference point. It's phenomenal how the market respects engulfing candles. Where it comes from, where it goes to. Where it comes from, where it goes to. So that's the power of the engulfing candle. Okay, that is the power of the engulfing candle.